Christmas season is at our door, and while most people are looking for the best gifts to offer to their loved ones, today, as every beginning of the month, I'll be sharing with you my full investing portfolio update for the month of December 2024. First, we'll start by taking a look at what are the different individual companies that I hold in my portfolio. Then we'll take a look at what are the ETFs that I have in my portfolio. And finally, we'll end with the sectoral distribution of it, and we'll make a quick summary of what are the different transactions that I've made over the past month. But keep in mind that at the moment, my main priority is to set aside as much liquidity as possible to be able to pay back my mortgage faster. Now, let's jump right into it, starting out as always with the technology sector, where you can see that I hold most of the big GAFAM, which are Apple, Meta, Google, and Amazon, as well as Elon Musk company Tesla. And in total, you can see that all of my different technology companies have been performing tremendously well over the past couple of years, where you can see that by far the best performing company that I have in my portfolio is Meta, that has been able to return some unrealized profit of over 168% compared to the average price that I've paid for. Another pretty well performing sector lately has been the energy sector, where you can see that I hold both Enbridge and Pembina in that field. And so both of these Canadian companies have still been able to perform quite well, especially Pembina compared to the average price that I've paid for. You can see that I've been able to make some unrealized profit of over 100%. Plus, as I mentioned in my previous videos, I haven't included all the dividend income that I've made from these companies, but for the beginning of 2025, I will make a new spreadsheet on it. So you'll be able also to see how much monthly dividend income I'm able to generate from all of these companies that I hold in my portfolio. Now for the financial sector, you can see that I hold one of the big Canadian banks, which is the TD Bank, as well as one of the largest insurance companies in the entire world, which is Manulife. While the TD Bank hasn't been able to deliver the performance that I expect them to be able to do over the last couple of years, on its side, you can see that Manulife has been able to return some great total unrealized profit of over 127% on the average price that I've paid for. And what is pretty interesting about Manulife is that I am able to reinvest all the dividend income that I receive from them every single quarter to buy new shares of it. Now jumping out to the communication field, you can see that I now have only one company in that field, which is the telecommunication company TELUS. And so for those that have already seen my different monthly update, you can understand that I have sold all of my Bell position lately. As I mentioned in my most recent video on Bell, I have decided to do this because I don't necessarily have that much trust towards this company for the future as I had in the past, especially with the most recent decisions that they've made, which have made me lost a lot of value on this stock. But at the moment, I personally believe that there are way better companies to invest in compared to these telecommunication companies that have not a lot of potential of growth. But still, I decided to hold to my different TELUS shares at the moment, which currently represents only about 1.85% of my total assets. And on its side, you can see that I'm currently down close to 17% on the total and the average price that I've paid for it. Now in the consummation field, you can see that I hold the company Couche-Tard, where it represents close to 5% of my total assets. And on their side lately, they've also been able to perform quite well with some unrealized profit of about 47% at the moment. Now for the materials company that I hold in my portfolio, you can see that I hold the Canadian company Savaria that represents about 3% of my total assets. This company that is mainly focusing on the creation of wheelchair and elevators, notably for oldest people, has been able to perform quite well over the last couple of months. In total, this company that is giving great monthly dividends has been able to return some unrealized profit of close to 40%. Now for the real estate investment trust company that I hold in my portfolio, which is Raucan, you can see that it has also been able to perform quite as well as Savaria lately, with some return of close to 40%. And just like this material company, Raucan is also distributing some monthly income to their shareholders. Finally, I also have a super small stake in the 5N+ company, which represents less than 0.50% of the total assets of my portfolio. Now let's jump to the ETF section, where you can see that the first one that I hold in my portfolio is the Vanguard S&P 500 dividend ETF with the ticker VFV. This ETF is basically tracking the 500 largest American companies in terms of valuation. And lately, the least we can say is that the American market, most importantly the tech, have been performing tremendously well, where you can see that I'm currently up by over 46% on the average price that I've paid for it. The second ETF on my list is the iShares Core Equity ETF with the ticker XEQT. This one is basically a global tracker of the overall market worldwide. And on its side, you can see that I am currently up by about 13% on the average price that I've paid for it. After, for my Canadian ETF, you can see that I've picked the iShares S&P TS6 ETF with the ticker XIU. This one on its side has been able to perform better than the global stock market ETF, where it has been able to return about 18% on the average price that I've paid for it. Then I also hold the famous SCHD ETF or the Schwab US Dividend Equity ETF. And on its side, this fund that is tracking some of the best dividend payers in the United States has been able also to return some great unrealized profit of about 22% over the past 3 years. For the next ETF on my list, it is the Vanguard Dividend Appreciation ETF with the ticker VIG. This one might be removed off my list eventually, notably to be able to use the money as a way to pay back my mortgage faster. But this ETF that is tracking some of the best dividend growth companies in the US has still been able to receive some great total unrealized profit of over 36% on the average price. And finally, my liquidity reserve that is notably used for my real estate projects is held within the global high interest savings ETF with the ticker cash. In total, at the moment, you can see that this reserve currently represents close to 10% of my total assets. As I mentioned earlier, my goal for the next month will be to increase this liquidity reserve. So in January and at the beginning of 2025, I'll be able to pay back my mortgage faster. And with all the equity that I will have built on this property, I'll be able to refinance it and go buy another bigger property in the near future. So now let's take a look at what is the current value of my investing portfolio. So you can see that it is currently worth close to $190,000 at the moment. This represents over $62,000 of unrealized profit, or an unrealized profit of close to 50% of my initial investment. In terms of the different ETFs, as I just mentioned, you can see that at the moment they currently worth close to $60,000, or an upside of about $10,000, which represent about 21% of unrealized profit. My goal in the near future, after I've been able to pay back my mortgage faster, will be to also diversify better my total ETFs. This means that I want to add more international ETFs to my portfolio, as well as increasing the total ponderation in other ETFs such as XEQT, because at the end of the day, I want my ETFs to represent over 60% of the total assets that I have in my portfolio. Talking about that, you can see that at the moment, my ETFs portion only represents about 31% of my assets, which is pretty much as the different technology companies that I hold in it. Then you can find that the financial sector comes as the third largest sector, followed by the energy field. And finally, we find the real estate sector as well as the consumption sector. And at the end, we also have the material sectors and the communication sector that comes as the smallest sector in my portfolio. Finally, for the few transactions that I've made over the past month of November, you can see that first I've been selling a few of my shares of cash in my TFSA to reinvest it in Enbridge, because in my TFSA, I don't necessarily consider that having a lot of money in cash is the better option, since I want to grow this money as much as I can in the long term. It is why in this account, I prefer to invest it in different great ETFs as well as great Canadian dividend companies. And as I mentioned earlier, I've decided in the past month to sold all of my Bell shares, so 40 shares for a total of $1,500. And with that money, I've decided to set it aside for my mortgage payment, so about 33 shares that I've bought with it of cash for about $1,654. But now on your side, if you're looking to find other great companies that could be pretty interesting for you to invest in before the end of the year, check out the video that's going to be right over here, and I will see you soon. Peace.